It is 9:04 a.m. Pacific Daylight Time. It is what is it? It's the 24th day of June, 2025, and this is episode 1121 of Bitcoin, and we've just got too much stuff to cover today in the ways of Bitcoin news. We're going to start this one out with this whole thing about Bitcoin knots. And if you're not sure what the hell's going on with Bitcoin knots, this is going to be a discussion about Bitcoin core nodes and being a full node runner and the decisions that you have the options to make, because you got a say in this entire thing. I don't think we appreciate that anywhere close to as much as we should. You have say in what happens in the Bitcoin network, and you do that by running whatever Bitcoin core or Bitcoin node software that you want to run. You can run LaBitcoin, you can run Bitcoin core, you can run Bitcoin knots. And a lot of people are opting for Bitcoin knots. And the whole reason that's going on is because of this filtering issue that Bitcoin core is taking out of the way in Bitcoin core's main core software. And the fear is that it's going to allow a whole bunch of spam into the blockchain and all of that. We've been fighting this for a while, but I'm actually rather surprised that the amount of Bitcoin knots nodes has risen to the level it has, and and I know why. It's just that I'm a little surprised at the speed of which Bitcoin knots has taken a hell of a toll on the amount of nodes that are being run, as opposed to LaBitcoin or Bitcoin core, and that's just because knots is not going to allow spam on the Bitcoin blockchain. At least that's the surface argument. That thing goes really, really deep, but what we're really looking at here is kind of a schism, again, like 2017, of a bunch of Bitcoiners that don't want certain things in the blockchain or certain ways that the blockchain functions, and a whole other group of people that think that that's bogus and they want to do it a different way. But Bitcoin knots has gained a lot of ground, and the fear, and honestly, I wouldn't be too worried. I'm actually not worried about this at all. I don't think anybody should be, but there's worry about a chain split, and will that kill the Bitcoin price? And we're going to read this one from Cointelegraph and Michael Tabone, who's writing about it. Bitcoin knots was first released by developer Luke Dash Jr. in the early 2010s, and it has long offered a more configurable and policy agnostic alternative to Bitcoin Core. Currently, most of the nodes use the Bitcoin Core client to support the Bitcoin network. However, Bitcoin knots has grown an impressive 638% since the start of this year, jumping from only 394 nodes to 2,909 nodes as of June the 19th. Well, this massive growth rate started to see significant upticks in May and now makes up 13.24% of all of the nodes supporting the Bitcoin network. Bitcoin knots' recent popularity spike suggests that a non-trivial share of Bitcoin's infrastructure operators, that would be you, the node runners, no longer trust Core to define Bitcoin's limits unilaterally. This is not just technical dissent, it is ideological. It sounds like an AI-generated thing to me. I'm having a problem with that sentence structure. I see it everywhere now. I see it daily. This isn't just X, it's X plus Y or something different. It's a hallmark of AI, but we'll just skip over it. The last time node count shifted this dramatically was back in 2017 on the eve of the SegWit 2X showdown. And back then, disagreements over the block size and miner power fractured the network into Bitcoin and then Bitcoin Cash. Now, another schism may be forming, but instead of block sizes, it's about the soul of the protocol, and it may dramatically impact price stability and adoption by year's end. Pausing to say, I think this is a little bit more hyperbole than it needs to be. So everybody calm down. But this thing is going on. Knots is growing in popularity, so we need to be aware of what the hell's happening. Bitcoin Knots began as a power user fork of Bitcoin Core, integrating patches, features, and policy tweaks that were too controversial or too early for mainline adoption. It hovered between 50 and 200 active nodes for most of its existence, serving as a staging ground for conservative developers wary of Core's influence. And from March 2016 through early 2022, node counts barely breached 200. Even during the ordinal surge in 2023, when BRC20 tokens and Bitcoin-based inscriptions strained block space and sparked renewed debate over what Bitcoin is for, Knots only briefly crested above 1,000 nodes before dropping back. Then came late 2024 as murmurs of an op return cleanup in Core began to circulate, couched in language about pruning, feed efficiency, and mempool hygiene. Knots adoption began to climb, and by early 2025, it had tripled. By June 19, 2025, it stood at 2,909 nodes, with growth still accelerating. The message behind the numbers is evident. A meaningful subset of Bitcoin's most technical participants reject Core's moral authority. Again, a little bit of hyperbole there. Where it was once assumed that Bitcoin Core spoke for Bitcoin itself, there is a growing appetite for pluralism and perhaps even open defiance. Tensions escalated further on June the 6th, when Bitcoin Core developers published a statement signaling a shift towards a minimally permissive relay policy. The announcement avoided specific terms such as op return or ordinals, but its implications were clear. Under the new posture, Core clients may soon stop relaying non-standard transactions by default, even if those transactions are valid under Bitcoin's consensus rules. And critics argue that this policy risks undermining Bitcoin's neutrality by enforcing a subjective vision of what types of activity should be allowed on the network. Core's proposed changes, slated for October 2025, including more restrictive handling of op return, the opcode that enables arbitrary data to be embedded into Bitcoin transactions. While this opcode has historically been capped at 80 bytes and discouraged in practice, it has underpinned everything from token issuance via Omni and Counterparty to NFT-style ordinals in recent years. Some developers argue that these transactions bloat the blockchain, crowd out financial activity, and should be deprioritized. Others say that selectively disabling or penalizing them violates Bitcoin's principle of neutrality. If a transaction is valid by consensus rules and pays a competitive fee, it should be relayed and mined. Knots, notably, do not implement these policy-level filters unless explicitly configured. Its rise suggests that the non-neutrality narrative around Core is gaining traction, and in other words, Bitcoin's policy layer, which was once quietly dictated by a small circle of Core's maintainers, is now being contested by nodes switching over to Knots in record numbers. This is not a hard fork scenario, but it is inching closer. The 2017 SegWit upgrade reached a boiling point when divergent software choices became incompatible. If Core's upcoming changes cause blocks or transactions to be rejected by non-Core clients, the stage is set for history to repeat. And with more than 13% of the network already running Knots, this is not just a protest vote, but the beginning of a parallel consensus. When Bitcoin split into Bitcoin and Bitcoin Cash on August the 1st, 2017, markets responded with volatility but no collapse. As Cointelegraph reported, Bitcoin dropped approximately 5.6%, dropping from about $2,875 on July the 1st to $2,718 on fork day. However, the dip proved short-lived. Throughout August, BTC surged nearly 49%, closing strong at around $4,050 and continued its rise to almost $20,000 by December of 2017. Meanwhile, Bitcoin Cash launched trading at approximately 0.0045 BTC, it's about $240 US, and then skyrocketed to $1,500 before stabilizing in the $300 to $500 range. Far from fracturing investor confidence, the fork solidified Bitcoin's dominance and gave dissenters an alternative in Bitcoin Cash. The stakes this time are higher, with Bitcoin ETFs, corporations stacking Bitcoin on their balance sheet, and the market being potentially poised for blow-off tops in the foreseeable future. This schism could have more market risk than we have seen in the past. If Bitcoin NOTS keeps its average growth run rate from May through October 2025, there will be over 5,000 nodes running the NOTS client. That will equate to around 23% of the entire Bitcoin network. That's a quarter of the network, guys. That level of adoption would mark the largest divergence from Bitcoin Core since the 2017 hard fork, and this time the rebellion is already inside the house. Okay, that's the end of the article. I'm not concerned about this at all. And the reason is I can run NOTS if I want to, and at the exact same time on a different machine, I can run Bitcoin Core. On a third machine, if I wanted to, I could run LeBitcoin. They all support the Bitcoin infrastructure as it is right now. Is it possible that we could see a fork? I suppose so. But we've been here before, and we will probably be here again. I really think that this is a little overblown. I do not think that we're going to be looking at a chain split. If there is, Core will probably win. I mean, and for those people who think Core is absolutely evil, I really think you need to get your head about you. These guys have been doing this software, reviewing this software. More eyeballs are on this software than almost any other free and open source software project in history. I just don't see a situation where Peter Todd somehow or another is able to take over the entire thing and turn it into something that nobody wants. I honestly think we really need to step back and take a big, deep breath about all of this. So, it came to my attention yesterday that both Semler Scientific and MicroStrategy are being sued in a class action lawsuit, or actually two separate class action lawsuits. Like for instance, this one, the Pomerantz law firm is investigating claims on behalf of investors of Semler Scientific. Such investors are advised to contact Danielle Payton, and then gives her email and phone number. The investigation concerns whether Semler and certain of its officers and or directors have engaged in securities fraud or other unlawful business practices. All right, so that was announced on June the 23rd. Then I've got this other one. Investors in Strategy Incorporated should contact the Gross law firm before July 15th, 2025 to discuss your rights. So, the Gross law firm has issued the following notice to shareholders of Strategy Incorporated, and yes, that is MSTR, that's the ticker, it's old Michael Saylor's outfit. Shareholders who purchase shares of MSTR during the class period listed are encouraged to contact the firm regarding possible lead plaintiff appointment. Appointments as lead or an appointment as lead plaintiff is not required to partake in any recovery, and then it gives a website to go contact the law firm. So what the hell's going on? Short sellers is what I think is actually occurring here. I think that there is a set of short sellers that they want to short either Bitcoin or Bitcoin treasury companies. And the way that they want to do it this time is they want to create a whole bunch of FUD. And one of the best ways to create fear, uncertainty, and doubt is to get lawyers to start suing companies and throwing out allegations that people like MicroStrategy and Semler Scientific have been lying to the people that they were selling shares to. Basically offering false, offering the shares and the promises of what was behind the shares under false pretenses. So I think this is the way that this is going to work. You got people that want to short Bitcoin and they want to short the stocks of Bitcoin treasury companies. You can't really do that right now just all by yourself. You need some kind of momentum shift, because right now, and I think it's stupid, you should just buy Bitcoin, but there's a lot of people buying companies that buy Bitcoin. All right, it's dumb. I'm not a fan. I don't think it's anything that anybody should actually do. You should just buy Bitcoin, but there's also nothing that we can do about it. So you need a momentum shift. So what do? You approach a couple of law firms and say, we need class action lawsuits against these major Bitcoin treasury companies that call into question not just the efficacy of their backing in their treasury with Bitcoin, but under what pretenses did they sell shares? Because they really want to crash the price of Bitcoin, and they want to do it through the proxy companies of Strategy and Semler. And if you think it's going to stop there, then you will be wrong. I expect a couple of more of these class action lawsuits to hit, maybe even people like Metaplanet. I don't think it's actually going to work. I really don't. Again, I am completely unconcerned, but it is there. It's out there, and that's why I'm bringing it to you today on the news that you can use. Let's move over to Amin Hasquanis from Cointelegraph, where he says Japan is proposing to reclassify cryptocurrency, paving the way for ETFs and lower taxes. So they want to reclassify what it is. What does this mean? Well, Japan's Financial Services Agency is proposing a sweeping reclassification of cryptocurrencies that would clear a path for the launch of exchange-traded funds and introduce a flat 20% tax on digital asset income. The proposal, introduced on Tuesday, suggests recognizing crypto as, quote, financial products under the scope of the Financial Instruments and Exchange Act, the same regulatory framework that governs securities and traditional financial products. The proposed reclassification could also shift Japan's current progressive tax system, which taxes crypto gains at rates of up to 55%, and take it down to a uniform 20%, mirroring the treatment of stocks. That change could make crypto investing more attractive to both retail and institutional players. The proposed shift is part of the Japanese government's broader, quote, new capitalism strategy, which seeks to position the country as an investment-led economy. The move comes amid increasing interest in crypto as a legitimate investment asset, and according to the FSA, more than 12 million domestic crypto accounts were active as of January 2025, with assets held on platforms exceeding 5 trillion Japanese yen, or about $34 billion US. In the proposal, the FAS also revealed that crypto ownership now surpasses participation in some traditional financial products such as foreign exchange and corporate bonds, particularly among tech-savvy retail investors. The proposal also responds to the surge in institutional engagement worldwide. The FSA cited data showing over 1,200 financial institutions, including U.S. pension funds and Goldman Sachs, now holding U.S.-listed spot Bitcoin ETFs. 1,200 financial institutions. That escalated quickly. Japanese regulators aim to support similar developments domestically, especially as global fund flows into crypto continue to expand. In April, Sumitomo Mitsui Financial Group, Ava Labs, and Fireblocks signed a memorandum of understanding to explore the commercialization of stablecoins in Japan. The collaboration will focus on issuing stablecoins pegged both to the US dollar and to the Japanese yen. The group also plans to examine the use of stablecoins for setting tokenized real-world assets such as stock, bonds, and real estate. In March, Japan issued its first license allowing a company to deal with stablecoins to SBI VC Trade, a subsidiary of the local financial conglomerate SBI, which said it was preparing to support Circle's USDC. So that sounds like a major policy shift is on the horizon for the people of Japan. And it's all going to be done so that there's no problem for them to issue stable coins against the Japanese yen and be able to dabble in products such as stable coins as Tether and USDC, which is going to be backed by the US dollar. I think it's more about the stablecoin play than anything else, but if you can get away from a 55% tax on digital asset gains and go to 20, that's better. But what would be best is absolutely no tax whatsoever so that you can have some money left over to buy 8 ounces of grass-fed, pasture-raised ghee from my friend GreatGhee. The Circle P is open for business. It's where I bring plebs just like you that have goods and services for sale to plebs just like you who might want to actually buy those goods and services. Because when you support people like GreatGhee, GreatGhee can support this show, the BitcoinAnd show that brings you the news that you can use every single weekday. GreatGhee. What does he make? Well, he makes ghee, Ghee. It's a clarified butter product. And it's made from grass-fed, pasture-raised Jersey cow milk in Southwest Virginia. It's made by hand. Excuse me. It's made by hand. Wonderful color. I'm looking at his Shopstr stall right now, and he's got a couple of really great pictures of this stuff. It's like sunlight in a bottle. And if you've never used ghee for food, you're missing out because this stuff has a completely different taste profile than just regular butter. So why is it clarified? When you heat up butter and you keep it hot for a long time, the milk solids that are left over in the butter fall out and you can filter them out so that all you get is the butter fat. You get no milk protein in it if it's done right. And GreatGhee is one of these people that knows how to do it right. It's used heavily in Indian food. It gives a deep, deep, deep flavor, and you're missing out if you've never used GreatGhee. So go to, well, actually, I can't give you the website because the Shopstr store listing is a huge URL, but it will be in the show notes. Make sure that when you buy GreatGhee, that you use the code BitcoinAnd. That way, GreatGhee knows that I made the sale for him, and GreatGhee can figure out whether or not that sale was worth anything to him. And if so, he knows where to send the Satoshis. That would be to me. Again, GreatGhee. If you want GreatGhee, go to GreatGhee, get your ghee and get it great. Get it going on. And then we're going to move on to stablecoin bill. Heads to House, and the Senate now shifts to the market structure bill. We haven't really talked about the market structure bill, but it is going to be important moving forward. Turner Wright, Cointelegraph. Roughly 1 week after the United States Senate voted to pass the Genius Act to regulate payment stablecoins, the chamber is now moving to discuss a path forward for a digital asset market structure framework. On Tuesday, lawmakers in the Senate Banking Committee's Digital Asset Subcommittee will hear from lawyers at Coinbase and Multicoin Capital as part of efforts to establish, quote, bipartisan legislative frameworks for digital asset market structure, end quote. The hearing will include testimony from Coinbase's Vice President of Legal, Ryan Vigrac, Multicoin Capital's General Counsel, Greg Zathlas, and University of Pennsylvania Wharton School Executive Director Sarah Hammer. Wow, the Wharton School of Business. Interesting. The hearing will be one of the Senate's first follow-ups on digital asset legislation since passing the Genius Act on June the 17th in a 68-30 vote. The bill moved to the House of Representatives for discussion, proposed amendments, and a possible floor vote. While the Senate considers a bipartisan solution for crypto market structure, the House is already moving forward with its own legislation. Earlier this month, the House Agricultural Committee and the House Financial Services Committee voted to advance the Digital Asset Market Clarity, or Clarity Act. The bill is expected to head to the floor for a vote soon. It's unclear whether the Senate will introduce its own version of the House's Clarity Act to address crypto market structure in the form of a companion bill or incorporating aspects of the House bill. Cointelegraph reached out to Senator Lummis, chair of the Digital Asset Subcommittee, for a comment, but has not received anything at the time. Combined, the stablecoin bill and the market structure bill could address many of the regulatory issues that leaders in the crypto industry have criticized about the United States. However, the legislation still faces pushback from many Democrats in Congress, questioning how U.S. President Donald Trump and his family could personally profit from the bill's passing, given their ties to the industry through meme coins, the World Liberty financial platform, and political donations from digital asset company executives. Trump said on Wednesday that he would sign the Genius Act with no add-ons if the House were to pass it quickly. However, it's unclear if digital assets will be a priority for the president as he faces scrutiny from ordering strikes on Iran without congressional approval over the weekend. Well, that's a whole other story, which we are not going to get into because we got to talk about Jerome Powell. He opened his mouth and started talking, and Christian Sandor and Stephen Alfer has what he said from CoinDesk. Fed's Powell reiterates patience, ladies and gentlemen, on rates in his congressional testimony. U.S. Federal Reserve Chairman Jerome Powell offered little change in his stance from his recent remarks, reiterating the economy is in a good spot, giving the central bank the room to be patient before considering easing monetary policy. Quote, for the time being, we are well positioned to wait, to learn more about the likely course of the economy before considering any adjustments to our policy stance, said Powell in prepared remarks. Today's testimony is of particular note, given talks this week from Fed Governors Chris Waller and Michelle Bowman. Both said that they would be supportive of a rate cut at the Fed's next meeting. To date, Powell has given no indication that he is considering any move whatsoever. The break with Powell by itself, not necessarily major news, comes as President Trump continues to make clear his displeasure with the Fed chairman's reluctance to ease monetary policy. Rate cut odds for July. Okay, so we're not doing anything this month, but July's coming up. The rate cuts for July continue to be a fairly slim 18.6%, according to CME FedWatch. Moving to September, however, the odds of one or more rate cuts jumps to more than 80%. The question and answer session with the House committee is underway, and this story will be updated with breaking news from that event. So, and I don't see any updates here in this particular story, but that's his testimony is going on. That's what's going to be driving the markets today. Speaking of, let's run the numbers. Futures and commodities, West Texas Intermediate oil taking massive hits. All of energy sector is taking massive hits because of the quote-unquote subdued retaliatory strike by Iran yesterday, as they apparently told the United States that they were going to send 6 ballistic missiles aimed at the air base in Qatar. They told them, apparently, according to several news outlets. So because of that, all the short sellers are getting their wish. West Texas Intermediate is down 5.6% to 64.62. That's off its high of $78, like what, the day before yesterday? Brent North Sea down 5.71 to 67.40. Natural gas is down 3.68%, back to $3.56 per thousand, and gasoline is down almost 5 points, back down to $2.11. Gold is down 2 points to 33.27 and 8 dimes. Silver is down 1.4%. Platinum is up 1.25%, and copper is up 1/4, while palladium is down almost 2 points. Most of ag is in the red today. Biggest winner is cotton, 4% to the upside. Biggest loser is coffee, 4.5% to the downside. Meanwhile, live cattle is crawling sideways, slightly in the red. Lean hogs down 1.5%, and feeder cattle are down 1/4. Meanwhile, all the financial legacy markets are happy. Dow futures up 1.06%. S&P is up 1%. NASDAQ is up 1.33%, and the S&P Mini is up almost a full point. We are at $105,460, which is a $2.1 trillion market cap, and we can get 31.7 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,882,725.83 of. Average fees per block are elevated, and there's a good reason for that. 0.05 BTC taken in fees on a per block basis. Looks to be about 14 blocks carrying 126,000. No, I'm sorry. 14 blocks carrying 27,000 unconfirmed transactions waiting to clear at high priority rates of 7 Satoshis per VByte. Low priorities, 5 Satoshis per VByte. We've had a crash in hash rate. We are down below 800 to 793.5 exahashes per second. I'm not concerned because even at just under 800 exahashes per second, we are still twice as much as we were from a couple of years ago. Actually, probably even more than that. I mean, honestly, dude, I mean, in June last year, about this day in 2024, the hash rate was 641 exahashes per second. And we are consistently climbing up. So that part doesn't worry me. But what people are speculating is, when we struck Iran, is it possible that we struck some of their Bitcoin mining facilities and took their mining capacity offline? We still have no hard evidence that that has occurred. However, this drop in hash rate is really coincidental when you look at the timing. But yeah, we're at 793.5 exahashes per second from the Middle Feast, which was yesterday's episode of BitcoinAnd, progressively worse, with 1,121 sats says, yeah, the drive to Nevada was long, but it never feels as long as the return trip to Ontario. Damn time zones. I have a 2013 Matrix that has made the trip successfully 4 times now. After calculating it out, it cost me 7 cents per kilometer. My next step is to increase fuel mileage and distance between fill-ups to maximize travel time. My matrix average, 29.7 to 30.12 miles per gallon. Thank you for your news coverage, LFG. Chill Now with 777 says, system error, no impersonation token accepted. The only daily news I can use. The others left click on you and drag you around. None of your business, right clicks and paste direct into you. Decrypting the suit speak, conversing using as few empty words as possible. The final stage of intelligence, just allowing things to work out on their own. Thank you, sir. End ascension. Yodel with 511 says, criminals blowing it on watches and Gucci. Shake my head. No imagination. Yeah, no shit. It's like just like the most boring people get the most amount of money. It's just amazing. Turkey with 500 again says nothing. BTC NPC with 500 says, thank you, sir. No, thank you. Yeah, see, he beat me to my own punch. Pies with 100 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. And here's some definite news that you can use. The United States Housing Authority may allow crypto assets in mortgage qualification. So this is now at the federal level. Like a couple of weeks ago, there's a couple, a couple of, forward-looking banks are kind of trying to think, how can we use somebody's, Bitcoin holdings as collateral and make that a qualification for a mortgage. But this is now at the federal level. So again, that escalated quickly. Adrian Zmunsky from Cointelegraph The United States Federal Housing Finance Agency will study whether cryptocurrency holdings could be considered in mortgage qualification assessments. In a Tuesday X post, United States FHFA Director William Pulte, who was nominated by President Trump, said that the agency is examining cryptocurrencies. Quote, "We will study the usage of cryptocurrency holdings as it relates to qualifying for home mortgages." The FHFA sets the rules for U.S. government-sponsored enterprises, the Federal National Mortgage Association, and the Federal Home Loan Mortgage Corporation. If the agency allows borrowers to list Bitcoin, stablecoins, or other tokens as eligible assets, it would integrate the asset class deeply into traditional finance. Until January the 23rd, most major banks were unable to offer crypto-backed loans or mortgages. This limitation was due to the United States Securities and Exchange Commission's accounting guidance known as SAB 121, which required listed companies to disclose crypto assets held on behalf of clients as liabilities on their balance sheets. This led to complications for banks, since capital requirements are linked to the balance sheet contents. On January the 23rd, the SEC officially rescinded this controversial guidance, opening the doors to new crypto financial integration. While crypto-backed mortgages do already exist, they are specific products offered by specialized private companies. Those firms typically allow customers to borrow fiat money to purchase real estate or for other purposes in exchange for locking digital assets as collateral, usually with high collateralization requirements. In such a setup, if the digital assets chosen as collateral fall in value, the customer often needs to add more assets to avoid liquidation in a margin call. With new guidance from the FHFA, we may soon see such offerings from traditional banks or even entirely new types of crypto-backed lending products. According to a report released in late November, a growing number of lower-income households are using gains from cryptocurrency investing to pay off their mortgages. Researchers wrote that the increase in borrowing is especially striking among low-income households in high crypto exposure areas. Mauricio Di Bartolomeo, co-founder of Bitcoin-backed loan company Ledden, recently told Cointelegraph that some Bitcoin holders are using crypto-backed loans to purchase real estate without selling a single Satoshi. He said those are generally high net worth individuals who do not meet the traditional criteria for real estate investing. Wow. This is actually much bigger than I'm making it out to be. But but it's only going to be big if they actually do it. Still, it's nothing to sneeze at that Pulte is actually looking at this. Now, it gets a little better because that tweet or that X post or whatever we're calling these things nowadays, when he put that out, and he basically what he says is this: Pulte in this tweet, and it was 16 hours ago, we will study the usage of cryptocurrency holdings as it relates to qualifying for mortgages. So none other than Michael Saylor himself responded directly to Pulte, and he says the following: we have developed a BTC credit model that we are happy to share. It takes into account loan duration, collateral coverage, Bitcoin price, Bitcoin volatility, and BTC ARR outlook to generate statistical BTC risk and BTC credit spreads. Try it now on our website. And then he actually puts the link directly to that. Pulte actually writes back and says, thank you, we'll review and be in touch. I don't really know what to say about this. This is actually kind of huge. The fact that he's looking at it and the fact that he responded directly back to Michael Saylor is, I don't know, man, this could actually happen. And if it does happen, then that means that all banks will be able to. Now, they won't have to, They can say, what you go into like, I don't know, Wells Fargo, and they say, what do you got for your mortgage qualification? And you say, I got a Bitcoin, and they say, go pound sand. You might be able to walk across the street to, I don't know, Bank of America, and they say, sure, we'll qualify you. I mean, that's enough collateral. We'll do the deal, because they're going to be able to make their own shots. They're not, banks right now won't do that. I mean, especially the bigger banks, especially the highly regulated big ass banks like the big four. They're not going to touch your Bitcoin as collateral until somebody like Pulte says it's okay. You can now do that. So if they do, I don't even know what that does to house prices. We really got to get these house prices way, 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 way down from where they are right now, because this is almost adding fuel on the fire. And who knows, maybe that's why Pulte is examining the possibility of using Bitcoin to prop up the housing market. Because guess what? If you get a whole bunch of banks that start allowing users to use their Bitcoin as collateral to qualify for a mortgage, you're going to get more purchasing pressure put on the housing market, which is definitely not going to take housing down in price anytime soon whatsoever. So this may actually work against us. I'm not exactly sure. It depends on how much Bitcoin you have, I suppose. But we need to move on to studio.primal.net. Odell announced this shit yesterday, man. I shouldn't call it shit. It's not shit. This is a really nice version of Primal. My only caveat here is that it's damned expensive. It's like $69 a month, something like that. Everybody gets it for free for a 1 month trial period. So you got to go to studio.primal.net. That's studio.primal.net. This is a Nostr client, but it is a premium Nostr client insofar that they are charging a premium price on a per month basis to use it. Like if I go to my account and I say subscribe to Primal Pro, here are my options. Primal Pro monthly subscription is $69.99 a month. A Primal Pro yearly subscription is $750 a year. I can already tell you, I'm not paying that. I'm not paying $70 for Primal Studio. I'm just not. However, that's just because I can be like, kind of a cheapskate. And I've already got way too many subscriptions. I'm sick of the subscription model. Just let me buy the fucking thing and stop asking me for money later on. If that said, I'm going to tell you this. If I had oodles of cash, just buckets of it laying around, I would definitely buy this product. This thing is really great. It's got some, right now, I'm going to make a guess that this is sort of a lot barer bones of a test release than what we're going to see from studio.primal.net in the future. But it's already got one of the coolest features I've ever seen. And that is I can schedule posts. I can schedule Nostr notes to go out at whatever time that I want to do that. Yes, Coracle has that as well, but Primal has never had that until now, and they're doing it through Primal Studio. But even better is this fascinating ability that I can choose on either I can write a note or I can write a full-length article. But both of them, I can send it, I can publish the note, I can publish the article, or I can propose it to another user. And this was kind of causing confusion yesterday when the news about this thing, whole thing dropped. So what does that mean? Okay, let's say that I'm like, I don't know, like let's say that I'm friends with the guys over at Bitcoin Magazine, and somehow or another they like some of the stuff that I write. And instead of going through like emailing them a pitch sheet and like, a bare bones article about what it is I want to propose, I can just write it on Nostr and I can propose it directly to Bitcoin Magazine. There's also the option, and that what that means is that nobody else can see it but Bitcoin Magazine. And then they have the option to actually publish that article under their own NPub. Okay, so what else would this do? Let's say me and you are friends and we're trying to start up like our own little media company, and we've got like, we're sending each other articles, or we're sending like articles to a third party. And that party is part of this group, and they're the ones that we don't want to have, each of us have, access to the NSEC secure key that allows the media company Nostr account to actually publish from. We want to keep it safe, right? We want to make sure that it's not spread around. Or better yet, if we start hiring other people to write articles for us, we don't want them to have the NSEC. We don't want them to be able to publish under the name of the publication. We want them to simply just write the article and send it to us, and then we will make a determination whether or not we're going to publish it. And then we have the option, because we do have the NSEC keys, to publish that. And all of this happens through the Nostr protocol with studio.primal.net. So I can write a full-length article. I can send it to, let's say, my editor who has control of the NSEC of the publication's Nostr account, and they say, this looks fine, boom, publish it. Hopefully they'll add the fact that it came from me. And I'm not sure if that happens here internally in studio.primal.net, or if it's something that has to be added on by whoever it is that I've proposed the article to. But essentially it sends what I write as a Nostr kind of note, but only the person I proposed it to will ever be able to actually see it, read it, and then make a determination whether or not it gets published under the NSEC of which they have control. Does that make sense? I can do the same thing with notes and articles. So in both of those things, there is a button at the bottom left that says propose to user. So if I go to studio.primal.net/articles and I hit the button that says new article, I can put in a title, I can add a hero image, I can put in an article summary, I can add tags, and then I've got a full-blown editor. So this is very, very nice. And I can preview it in a couple of different ways. I can preview it like it would be seen on a browser. I can preview it like it would be seen on a phone. And I could preview it seen as it would look in feeds. I can schedule the published time, just like I can do with notes. And again, I can propose to some Nostr user. This really is this Primal thing, and I know a lot of people have issues with Primal. I honestly, it's not that I don't care about your issues. It's that it's a good product. I'm sorry. I know that people do have some issues with Primal. But it's a good product, and I really enjoy using it. So I do use it. But this, what I'm looking at right now, it's slick. It works very, very well. It has a lot of the features that I've been wanting. So go try studio.primal.net. That's studio.primal.net. You can at least get 1 month free. And if you're just swimming in oodles of cash, you just can go ahead and pay the $70 a month. Because if you are, willing to pay $70 a month for this, then you're probably somebody like Anthony Pompliano, whose Bitcoin treasury company ProCap has actually purchased $385 million worth of Bitcoin. So true to his word. Again, there's a lot of people that have a lot of problems with Anthony, and I'm not exactly his biggest fan, but I don't hate him either. He actually did what he said he was going to do, and he actually has bought Bitcoin. This is from Daniel Kuhn in The Block. Anthony Pompliano's recently revealed Bitcoin treasury company ProCap has acquired its first 3,724 Bitcoin at a time-weighted average price of $103,785 per coin. It was valued, the purchase, at $385 million and it will now sit on the firm's balance sheet, offering a leverage play for investors interested in exposure to Bitcoin's price, but preferred to hold equity. ProCap aims to eventually hold $1 billion worth of Bitcoin. On Monday, ProCap unveiled that it had proposed a $1 billion merger with Columbus-Circle Capital to go public as ProCap Financial Incorporated, and the move is part of an accelerating trend of so-called crypto treasury firms that fund digital asset purchases through equity and debt sales, largely inspired by the success of Michael Saylor's strategy. That's pretty much all we need to know. I talked about it yesterday, and here we are today, 24 hours later, and he's actually bought the Bitcoin. But on this note of Michael Saylor, do remember, for all, and there's a lot of people that are bitching about, and I'm one of the people that bitch about it too. You should just buy Bitcoin. Do not buy MicroStrategy shares. Sure, this is not investment advice, but I honestly think that you're better off holding the actual asset itself, because that way it's not paper. But beyond that, remember a couple of years ago when Michael Saylor put out his webinar and he invited like the Fortune 500 chief financial officer, like from all of the Fortune 500 companies, and like a couple of hundred showed up, and I think it actually crashed the webinar, and they had to like kind of like figure something out because they had so many people subscribing to the feed that it freaked it out. And remember how he gave everybody the plan on how it was that he was doing what he was going to be doing? And remember how we bitched and moaned that nobody did the thing. Nobody actually bought the Bitcoin. Nobody actually put his game plan into place. Well, times change, don't they? Because now we're on the other side of the river Styx, and now everybody's like going, oh my God, we're all going to die because of Bitcoin treasury companies. You want to talk about it like this is like a hand grenade of a proposal from somebody like Michael Saylor. This is where he just pulls the pin and throws the grenade, and you got to wait a couple of seconds before the son of a bitch goes off. That's what happened here. Now everybody is doing, they apparently took 2 years to study this thing that Michael Saylor put out 2 years ago and have finally come to the conclusion, pulling the trigger. Pulling the trigger is just one after another, after another, after another, after another. To wit, Amazing AI announces adoption of a Bitcoin treasury policy from Bitcoin Magazine. Amazing AI, a global financial technology group specializing in online consumer loans, has announced today the adoption of a Bitcoin treasury policy, marking a strategic shift towards integrating Bitcoin into its balance sheet. Furthermore, from another article out of Bitcoin Magazine, Sequins launches a $384 million Bitcoin treasury initiative with Swan Bitcoin. Sequins Communications, a French-based developer of 5G and Internet of Things semiconductor technology, has announced a move into Bitcoin with a new treasury initiative backed by a $384 million private placement. The funding includes $195 million in equity securities and $189 million in convertible secured notes. Sequins plans to allocate this capital toward building a Bitcoin position alongside its core Internet of Things operations. So that's number 2. Number 3 is the blockchain group acquiring 75 Bitcoin after a 7.2 million euro raise. Today, the blockchain group, listed on Euronext Growth Paris and recognized as Europe's first Bitcoin treasury company, has announced the acquisition of 75 additional Bitcoin for approximately 7 million euro. The purchase brings the company's total Bitcoin holdings to 1,728 BTC, valued at around 155.8 million euro. But we're not done. Number 4 is DigiAsia, which is another fintech company, is going to launch their very own Bitcoin treasury strategy. This is also Bitcoin Magazine. DigiAsia Corporation, a leading Southeast Asian fintech as a service platform, has signed an indicative term sheet for up to $3 million in non-recourse debt financing to kickstart its very own Bitcoin treasury acquisition strategy. The funding comes from High West Capital Partners and is expected to close within 45 days. It just goes on and on and on and on and on. And I know the question that's seething in your gut. So why is not the price of Bitcoin rising? I'm of the mind that it's really paper Bitcoin, that we're dealing with a lot more paper Bitcoin than I wish to admit. I don't know that for a fact. Okay. So do not take this as, you got to take it with a grain of salt, because I have no proof and I'm never going to be able to find the proof. It's not going to happen. Still, the only real thing that explains this is that there's paper Bitcoin on the market in an amount that is much more than I thought was actually floating around last week or even yesterday. Again, please, grain of salt, but we're still sitting at 105, and we have, this is now what I gave you 4 companies in a row. They are either adding to their stack or they're brand new companies coming online with their own Bitcoin treasury strategy, and they're just using Michael Saylor's playbook. That's all they're doing. It's the same thing. They sell shares of their company so that they can get cash to buy Bitcoin. And the other part of that story is that they print convertible or sometimes non-convertible debt instrumentation in the form of senior notes and sell that for cash to buy Bitcoin. So one is an equity play, which has the tinglings of a little bit of debt financing, but the real debt financing is just hey, we're going to issue these notes, you buy them, basically you're loaning us money. Some of them have a percentage yield on it. Some of them you can convert to equity. In some cases, there was one that I read to you, I think it was a couple of weeks or last week. You get nothing. It's like you got to wait until the maturity date, and then you get either Bitcoin back or you get cash back. That's it. You don't get to convert it to equity. It doesn't have a yield, and people just buying them, They don't give a shit. They don't care. It's amazing. And so that was what's so funny about thinking back 2.5 years ago when Michael Saylor did the webinar and nobody did anything. And everybody in Bitcoin kind of freaked out and was going, nobody breathed a sigh of relief. Everybody was like, oh, well, I guess that went nowhere. Well, here we are 2.5 years later, and here we are. Bitching and moaning about A, paper Bitcoin, B, what kind of idiot would actually just loan their money to a company so that they can buy the very thing that you could have just bought? Hairless monkeys don't make sense most of the time. And we're right here again today. Anyway, so that's the news that you can use for today. Please consider supporting the show. You can do that simply by zapping me on Nostr. Or if you are using a Podcasting 2.0 app, just stream me Satoshis or send me a Boostagram. But legacy apps don't do that. You got to go to New Bitcoin. Hold on. What? There's a thing. There's an actual website for New Bitcoin, or not Bitcoin, new podcast apps. I think it's newpodcastapps.com. Yeah, I found it. It's newpodcastapps.com. Newpodcastapps, apps.com. It's going to take you to Podcast Index, but newpodcastapps.com is just pretty much an easy way to figure it out. That's where you can find all the podcasting apps that are Podcast 2.0 enabled. You need a modern podcasting app. You got to get off of Apple Podcasts. You got to get off of Spotify. You got to get off of all this crap that do not give you the features of modern podcasting apps. And if you want to support the show, Modern podcasting apps is the fundamental way to do that as we move forward, so that content creators and musicians and artists and all of us that try to actually put something out there in the wild to be consumed by people who find it useful don't have to go through a third party. You can just support me and anybody that you want directly. We have the technology, and it's just going to get better, but it's not going to happen unless you go to newpodcastapps.com, get yourself a modern podcasting app, and start supporting the BitcoinAnd show, and I will see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.